Hello, friends. It's another week. Let's get into it. This one's actually, I think they're all good, and I'm a nerd. I get it, but I think this week's got some really good data. So let's hop into it and see what we got here, team. So, long story short, we got 30-year fixed rates. I saw CBC just moments ago; they were showing like 6.75 ish, but according to Investorpedia, 6.96. So rates are up as evidenced by this chart. Remember, guys. Green is good, down is bad. So we've had a bunch of days here this last week, 2 weeks where things are bad. Some of that has to do with just the news that's coming out. Some of it's not totally credible in my opinion. But Bob Bullard, who is part of the Fed, he wants another 75 basis point rate hike. That is huge. The Fed's projected to do another 25 in 2 weeks, early May 3rd. So they're projected to do another 25. I really think, my personal opinion, they could probably not do anything and just wait and see and be okay. The 25, fine, but he's advocating for a massive increase. He says there's no recession. He says there's no banking troubles. I mean, again, look at the news, guys. So, banks are failing. I think that has to do some troubles, and it's still too new to see what the real problems could or could not be. So, anyway, that's not helping us. But here's something to share that I thought was really interesting. Personal savings rates. You guys can see this. We're at the lowest we've been in a long time for the amount of money, and it makes sense, right? The grocery bills are super expensive. People are spending their money on cars. I think per last week, what was it, like 17% of people have a car payment above $1,000. The average car payment is like 800 nowadays. So yeah, savings accounts are hurting because of inflation and just where things are. So credit card balances, the trade off when savings are down, it's expected that credit cards do go up. So that's amazing to me as far as just looking at these graphs. So if I think when rates come down later this year, because I do think they will, it'll be a great time for cash out. So if either you or somebody who's loaded up on credit card debt, there should be a lot of equity hanging out in houses from just the last couple of years of appreciation. Here's millennials, guys. It's obvious. We've all said it. They're a big buying class. They are coming, and they're coming in droves, but they're not buying houses as quickly as they were. But here's the tipping point for not just millennials, but just in general. Supposedly 5.5 is the sweet spot. Like 74%. I don't know if that stat's on here. It says 66%, but I saw a stat that said 74% of people say that when rates hit 5.5, they're jumping back in the market. That means if you're out shopping for a home right now, it is a good time to buy because those people aren't out looking just yet. When they do go down, rates can and will go down, I believe, towards the Q3, Q4 of this year. I think you'll see rates in that mid-5 range. You could have a lot of buyers. So, guys, as I mentioned, those millennials, for those that are out there, they're only hitting just 50% of the homeownership rate. Why? Even though there's a ton of them, it's because they're getting married later. So getting married, having a wife, having a husband, having a spouse, that prompts people to buy homes because now you got two incomes and maybe you can afford the house you want. So they're not getting they're married till later in life, early 30s, compared to like our parents or people that are in their 60s or 70s. They would get married in their early 20s. The millennials are getting married later. So those folks there are a ton of people that are still going to be buying homes in the next 5 years, give or take. So there is a shortage of housing. We've talked about it. Look at this, housing starts. Remember this time last year when rates really kind of just, started really increasing. Think about this, guys. The builders stopped building. I know a lot of our builders, if you're watching this, think of the July, August time period when things just hit a halt for traffic, that builders just stopped buying or stopped building rather. So check this out. Household formations. Look at all the households. We're forming about 2 million people here. This is the 1-year chart. You guys can see how, and it's weird how there's a dip in September, right? I don't know where the households went, but the household formations are still coming because these millennials are getting married and wanting to buy. These are numbers that just show that there is a massive shortage. But the point of these numbers is, guys, even though there's 900,000 homes listed, 1 million homes listed for sale, give or take, it depends on the month. Half those homes are like 25%, 25 to half percent, somewhere in there. 25 to 50% of those homes are under construction. You can't even move into them. So there is a massive shortage. There's a graph to prove it. You can see how, look, March of 2023, 563 homes. So you got a ton of people that are currently wanting to buy, waiting to buy when rates hit 5.5. This is about as good a time as any. And there is no, in my opinion, supply and demand. I don't see any bubble coming from the housing market, especially in Dallas-Fort Worth. But if you haven't done it already, Let us know your feedback if you agree, disagree. mortgagemark@mortgagemark.com. That is a new email, hence the reason why it's highlighted in yellow. So please make sure you're updating our email address, mortgagemark@mortgagemark.com. And as always, guys, get social with us. Find us, like, subscribe, share, all that fun stuff that you're supposed to do. But again, long story short, guys, there are a lot of people that want to buy homes. They're waiting for rates to come down. I think rates can and will come down. When they come down, guess what happens? Those people all come out looking for this really low inventory that we have, and prices keep going up. So if you're in the market for buying a home, buy now. Contract while you can before the latter part of this year when rates go down and people start thinking, man, I need this. So I do think rates will come down because inflation will come down. We'll see. If you need anything, just give us a shout. Bye-bye.